In this video, I'm going to talk to you about capital allowances specifically for serviced accommodation businesses. And whilst it is around owned assets, you should still pay attention even if you are using the rental arbitrage model, as you can use it as leverage when speaking to landlords to win deals. In the main, capital allowances saves you tens, if not hundreds of thousands of pounds, because we are now operating as a trading business rather than an investment business, which is typically found in your residential HMO style businesses or your AST style businesses. How it works is basically we have a house or a flat or whatever it may be that you are using. So you've bought this house and let's just say for argument's sake it was £100,000. The capital allowances element of this is basically all of the fixtures and fittings. So if we turned this house upside down and shook it, everything that doesn't fall out, pipe work, wiring, those sort of things, then they are classed as your capital allowance expenditure. Now, to keep it in its simplest format, you would be looking at something between 21 and 27% of the purchase value. So in this example, let's use the lower figure. We're going to end up with a capital allowance of £21,000 for that particular property. Now, what you can do is this figure here can then be written off against your income that you generate into this property. So let's assume we generate £2,000 per month. Obviously times 12 months, we've got £24,000 worth of revenue into that property. We can actually write off £21,000 worth of revenue from the capital allowance expenditure and therefore pay a hell of a lot less tax. You can also, depending on your tax year and depending on where we fall, because the limits are about to change, but you can also carry that over. So if, for example, here we actually only made 10 grand and we were left with £11,000 after we deduct the 21,000, then you could carry this £11,000 over to the next tax year and again write it off. As you can see, this is very powerful, and it can actually mean that you can go several years or at least 12 months, because this should be the typical sort of annual income that you would generate. Some of these properties are obviously higher in value and create bigger capital allowances, which can put, sometimes 50, I've seen over £100,000 worth of capital allowances on bigger buildings. That means you can earn a lot of income before you actually start paying tax. That money can then be reinvested into your business so you can buy more assets and ultimately start creating more cash flow. This is the power of what we do as this business, and this is also the power of getting educated and understanding how it works. This is in a very simple format. The detailed format would blow your mind. Even when my tax specialists speak to me about it, I have to get it condensed down by my accountants, because these guys speak in riddles but they know it inside out and they're looking at everything. In the main, the process is very simple. So you would instruct a capital allowance assessor, a valuer. So they would be, a capital allowance valuer. They would come out to your property and they would, go around the property just like a valuer would, and they would give it a valuation. That valuation then gets passed into your tax specialist, who will then check that all of the criteria is met to be able to then write this off against your income. Obviously, if it's not done properly and you incorrectly do it, and this is why you should always be working with experts. If you incorrectly do it, you could end up with a bill from HMRC or even worse, fines. The tax specialist then pass this on to your accountants, and then at your year end, they then file your accounts, less obviously the capital allowance expenditure that you're claiming versus against the revenue. This is a powerful system, and this is why you need teams of people to do it. Now, how can you make this appealing to landlords if you are only doing the rental arbitrage strategy, or rent to rent as it's known in the UK? Well, simply be that if you are offering the landlord a fixed rent, then it may not work. But if you are offering the landlord what we call trade-in income, which basically means that there has to be fluctuations and also risk attached to that income. So the risk element is that it's not guaranteed every month, like a rental of $750 a month, that's guaranteed, so that doesn't qualify. And therefore it's got to fluctuate in terms of the income, so therefore the risk is the fluctuation and vice versa. If you can offer them this style structure, they can then claim capital allowances on the properties that they are renting out to you. So this is quite a clever way to win over a lot of deals and also get your rents a lot cheaper. Now, you would typically put this into a joint venture agreement where you may share the liability and share the risk, and more than the fixed rent guarantee, but it's worth a conversation because ultimately they could save fortunes in tax. And by knowing what you're talking about and being able to present that to a potential landlord is an absolute game changer for your close ratios and make sure that you acquire more properties, and quite often acquiring properties where they will then be invested in it a bit more, potentially spend a bit of money to refurb it because they'll want it to work a bit better, or maybe just giving you better terms, and ultimately meaning that you spend less cash to get into it and then you can use that cash to set up more units. Because this whole game, as you're hopefully starting to see across the series, is about acquiring as many units as possible, because one unit can only create so much cash flow. But once we've got that cash flow maximized, we need to find another one or your business doesn't grow. You've got to find more and more units for your business to keep growing, and that is ultimately what we need, and we need cash flow to be able to keep setting them up. But in the start, you can use this. It's a great strategy on top of the Section 24. Go back and watch that video as well. You start talking to landlords about the Section 24 benefits plus the capital allowance benefits, and there is no reason why they should not use your service. I say it time and time again, what we offer landlords is far greater than any estate agent can or any tenant can. And these are just some of the reasons why. So get clued up on it, get out there, communicate it, and sell your value, and you will acquire a lot of stock. If you're enjoying the series, please subscribe, and do me a favor, tell your friends about it and get them to subscribe. Tomorrow, we're going to be back with the expansion of a serviced accommodation empire video, and I'm going to show you how you can really accelerate your journey very quickly by just knowing a few simple things and putting in a few simple techniques into your current business model and your current activity levels to blow up over the next 12 months.